everybody.
Hey, good afternoon, everyone. I'm Michael O'Reilly. This is my wife, Denise O'Reilly, and we are very appreciative of you guys taking time out of your schedule to spend the next 30, 40 minutes with us on a subject that's near and dear to our heart, which is assisted living. And with that,
Definitely near and dear to my heart. I grew up in this business. It was my family business. My parents were pioneers in the residential assisted living space in the 70s and the 80s. At one point, they had probably 7 of these going at the same time. So it's a business I grew up in. Now, Michael and I run our own residential assisted living homes here in California. So
yeah, we've been active in the space for about 7 years now. And we believe that there's just a growing need. The demographic is huge. We'll illustrate that throughout tonight's presentation. And we really just wanted this to be a more informative webinar. We're not really bringing an offering to the table at the moment, but we want to educate the need that's out there and also the opportunity for investors to get involved in this space.
All right. So we're going to go over navigating the heart of senior and assisted living, exploring innovative investment opportunities in the booming market. So Michael and we run a real estate investing firm called Flow Equity Partners. We also have Flow Equity Funds. And flow means so much to us. It has different meanings, but as it pertains to business and investing, it means finding lucrative opportunities for wealth in investing. And as it pertains to life and just our core values, it represents freedom, lifestyle, ohana, or family, and well-being. This is us. So I have been in real estate for over 20 years. I've done acquisition, sales, property management. I now do operations and asset management. And Michael has been an equity trader for over 23 years. He worked for one of the largest agency-only block traders in North America. And together, besides multifamily, as I mentioned, we own and operate senior assisted living care homes in the state of California. All right, so this is the agenda. We're going to start with a brief introduction. We're going to talk about the silver tsunami. We're going to talk about why invest in senior and assisted living, investment avenues beyond traditional senior living. We're going to discuss the challenges and some of the risk mitigation. We'll look at the future of senior care, smart investing in senior care, and then we'll wrap it up with a little bit of a Q&A, and then we will conclude. All right, so here's our introduction. So the landscape of senior and assisted living is undergoing a very profound transformation, which is driven by this major demographic shift, technological advancements, and a growing awareness of the unique needs of our aging population. So as we embark on this journey together, we'll delve into the heart of this booming market, and we'll explore the challenges and also the vast array of the innovative investment opportunities that it presents. So you might have heard the term silver tsunami. It had been coming for a long time, but it is here. So what is the silver tsunami? So silver tsunami represents the baby boomers who were born between the years of 1946 to 1964. And they are turning the age of 65 at an astonishing rate of about 12,000 per day. So the U.S. Census Bureau says that by 2030, that 76.4 million baby boomers will be 65 or older. And thanks to better healthcare, healthier lifestyles, people are eating better, they're exercising. That translates to them living longer. And so that again presents the opportunity that we're presenting to you today to be in this space as an investor or as an owner-operator.
And what's interesting is that number that Denise put out there is that 76.4 million baby boomers. Well, that is the largest aging population in U.S. history. And shortly behind that is the millennials, which is about almost 3 million. So the investments that we build and invest in today to serve the needs of right now will also be here for the needs of tomorrow. So we're looking forward to being a part of that.
On the other slide, we could stay here. But the last part of that was that the elder population will outnumber the younger generation by 2034, which is pretty interesting. All right. So this chart shows just the exponential growth baby boomers 65 and older for the next decade from 2023 to 2033. It shows that the population is expected to grow from 63.7, where it is right now in 2023, to 81.7 in 10 years in 2033. So that's an amazing 28 million more baby boomers that are going to be at that age at that time. And they're the largest generation in U.S. history. So this illustrates rent growth by property type. So if you look at the orange dotted line, that represents senior living. So this is from the years 2007 to 2020. And it also represents other asset classes or property types. There's office, industrial, retail, hospitality, multifamily, which we're also in. You see the stability over the years for senior living. It's pretty much, it hovers right below 5%. So that's telling, and that's strong, and that's only, it's going to improve as the years go on. So you see a couple of these other competing property types. The yellow line represents the hospitality industry, and we all know after COVID, it just took a nosedive. You could see that dramatic shift here. And office, you see during the GFC, global financial crisis, it also took a sharp decline during that time. And this chart cuts out the 2020, but it's also taking a sharp decline now because after COVID, there's just been such a popularity increase in working from home, remote workers. So now that's also experiencing a sharp decline.
Also not on this chart, which Denise had mentioned, we're also in multifamily, and multifamily right now there's a lot of distress in the market, mainly associated with the debt that's been acquired on these properties. But you could see that, with the aging population and the demographics, this chart is obviously steady for assisted living, and it's about to just, in 21, 22.
So now I'm going to talk a little bit about senior housing supply versus demand, and we're going to forward just a little bit so you can look at this graph while I'm talking about it. So this shows, if you look at the blue line illustrates the predicted growth in the supply of senior housing. And the trend suggests that while supply is increasing, not at a rate sufficient to match the demand. If you look at the orange line, that indicates a steady increase in the population aged 80 and over, which signifies a growing demographic with specific housing needs. And then the brown line is the ideal balance where housing supply meets the demand of the senior population. And this is a target for planners and developers to aim for. Now, if you look at the shaded area, that represents the gap between the supply and the demand, forecasting a shortage in the senior housing sector if the current trend continues. Okay. So this talks a little bit about the untapped potential in senior assisted living. So we already talked about the statistics, the population growth of people 65 and older. So 7% of the 65 plus demographic will need assisted living. So if you look at the years between 2009 and 2060, there's projected to be, or has been and will be, a 239.1 increase of people 65 and over.
Staggering statistic there.
I know, it's amazing. And then just looking at some future projections, year 2040, it's 5.7 million, 2060, 6.6 million. So the numbers are just staggering. And these are real people. And as 7% of that demographic are going to be needing assisted living services. And there's just not enough in that industry right now to service this growing population. That's why it's kind of a supply-demand need. You might have heard of the term red ocean as opposed to blue ocean when it comes to business and investments. So red ocean investments or businesses are ones that are overcrowded. There's a lot of competition in the space. Blue ocean is kind of wide open, There's not that much competition. So there's a lot of opportunity that presents itself in a blue ocean type investment opportunity. If you look at this pie chart, projects that there's going to be a 300 trillion.
And so what's noted also down here on the bottom, which is interesting, is senior living average cost per household is about $65,000 annually, which I think is a little bit low. It works out to about $5,400. And we look at two spaces. We look at boutique RCFEs in California, which we own and operate for about 7 years now. And then we've been looking at larger facilities outside of California, development projects for 2024, mainly in Texas, but not specific to just Texas. But the need is so great that these facilities cannot be built really fast enough with this aging demographic. So what would you say, Denise? This number works to about 5,400. We're probably between $6,000 and $8,000. What on average? About 7,400.
Yeah, definitely. Where we operate in California, I would say our average per month for assisted living care is between 7,000 and 8,000 for a small residential care facility, which is actually, I mean, it sounds like a lot, but if you compare that number to some of the bigger box facilities, they have incredible, I mean, to just the average person, it sounds like a lot. Sometimes there's buy-ins of 50,000 to 250 and upwards of there. And I know one particular large facility in our town charges a minimum of 15,000 per month, and then other services are add-ons from there. So staggering.
Much like the changes that happened in the airline industry, where at one time you bought a ticket and you were given refreshments and hospital, snacks and drinks, and now everything is a la carte. A lot of these facilities, even with having exorbitant administrative admission fees, on top of the pretty large, monthly fee, there's, everything's a la carte of what you want. We don't operate our facilities like that, but that is what's in the marketplace currently. We even heard of one community, bigger box, kind of a more resort lifestyle, but it's upwards of $1 million just to get it into the community. So there's the whole spectrum that's out there, from high-end small boutique to, really demographic that might be more economically challenged. There's need across the board. And so we really just want to be able to share a little bit of that with you guys tonight, and let you guys know a space that we've come to know and love. So there's a couple different ways to invest and be a part of this space. One type is just equity investment in a facility. You could do that direct investment. You could go through private equity funds that operate in the space for a number of years, similar to REITs. There's also a partnership with operators. And I think there's also a huge opportunity for anybody who's listening to this who has been considering it, also potentially owning and operating your own. The need is there. Doesn't matter what town across the USA. I think it's really an underserved demographic. There's also a huge advantage or opportunity for the, it's not an old, industry, or I should say it is an old industry, but there's technology is meeting the need of innovating in this industry. There's a whole group of tech solutions that are, centered to mitigate risk, not only to the operator, but also to the resident. And, there's all kinds of things from order management solutions, pain medications, AI, robots, virtual reality, all kinds of things to keep a resident stimulated and just, prolonging, life, really. There's also peer-to-peer lending. So people do, lend into people that are already in the space, know and are familiar with it. And so those are just a few ways that are available currently. We hope to bring some solutions or opportunities later on this year to our investment database. But right now, we're really just trying to gets more eyes onto the space and get people up to speed. So we get a lot of deals that come across our desk, and I'll just give you an example. This was a two facility portfolio acquisition that was presented to us in Tennessee. 240 beds each. We had 120 residents. 6.2 purchase price. 1.2 million capex renovation budget. There's $800,000 closing or reserve costs. So all in was the cost of $8.2 million. And if we reverse engineer it, breaks down, it's a 4-year investment time horizon. And for anybody who's been involved in the commercial real estate space, there are certain metrics that are used in order to calculate the profitability of an investment. One of those being IRR. So we had mentioned briefly earlier that we also, from assisted living, we found other commercial real estate investments, one of them being multifamily. So I'm just going to compare this to multifamily. The IRR, which is the internal rate of return or the velocity of money, you could see is upwards of 35%, which far outpaces the IRR that would currently be achieved in multifamily. Also, the cash on cash, even in the best of times in multifamily, is almost double. The average annual returns is upwards of 35%. The equity multiple is higher than multifamily currently at 2.5x. And that's also given into consideration a 7% pref. And if people are not familiar with preferred returns or waterfalls, 7% pref is, let's say, a passive investor invests in one of these facilities, like this given example, they would get a 7% preferred return before any of the GPs would see any results from the investment. So it more close the GP and the LP group when trying to achieve investment returns. And I believe we have a second one, Denise.
Okay, so this is another deal that came across our desk, and this is a development deal, not for assisted living, but this is a 55 and older community, meaning they're active adults.
A little bit of a precursor into the same space.
So this is new construction, so it's considered a Class A deal. And this one is 112 units. The land purchase was $475,000. The total development budget, $18.48 million. And then we have $4.4 million remaining capital raise. The total all-in budget was $19.65 million. So that's just about $174.5 per unit. And then that was taken on a loan for $13,755,000. And then the projected returns for this particular deal, the IRR that Mike was talking about on this particular deal is 20.47, not quite as strong as the prior deal that he went over, but still really good. And since it's a development deal, it's a 0 cash on cash. And then the equity multiple is 2.01.
So you might ask yourselves, okay, this is a 55 and older community. The other one is assisted living. Why are we looking at these two types of deals? So these are the type of deals that come across our desk all the time, along with smaller deals, along with larger deals. But we picked these two just to illustrate what Denise just read, which was almost 20.5% IRR. So you could see how much, the prior example outpace even a brand new construction. In a brand new construction, there is typically no cash on cash initially. And there's cash on cash right off the bat, in the assisted living remodel example that we just gave. And the equity multiple is higher. So they can be very profitable. Now, in the space that we played in, California, there are assisted living homes that are known as residential care facilities for the elderly, or RCFEs. And in the rest of the country, they're known as residential assisted living, and they're known, like the acronym is ROUS. So in our space, Denise, based upon our 7 years of operating, what would you say is our profitability, even on a small scale?
So I would say an average or our average RCFB would be 70% for expenses, and the net returns are usually between 20 and 30%.
So typically in an older RCFB model in California, historically there was a couple, let's say, that would come in and they would care for patients and they would receive housing, basically, right? And that model really doesn't, you can't get away with that model anymore. And so a lot of the older operators in this space, even with these large demographics that are headed our way, they are exiting the space. But if you took note of what Denise just said, a 20 to 30% operate or profit margins is still a very healthy margin for most small businesses.
Definitely. I mean, there's small businesses that are successful at a 5% margin or a 10% margin. So the margins are there, they're good. And what Mike was saying is the regulatory environment has changed. Back in the day when my parents operated homes, there would be like immigrants coming, couples who would come, and they'd be the ones who would be caregivers for the residents, and maybe they'd work out some deal with the owner where they would just get board and care and just get paid, a nominal amount. It maybe didn't adhere to the minimum wage at the time, but that really changed drastically, I'd say in about 2013, where there was a lot of oversight that came into this space when it came to labor laws, elderly, a lot of regulation because they wanted to prevent malpractice. So expenses went up because, the average caregiver today gets paid in our market $18 an hour and up. So everything else went up accordingly as well. What we need to charge families, it's inflation basically. But even with today's pricing to run these businesses, as you see, there's still a good profit margin.
Absolutely. And a need. And so we feel like this is a very resilient market. We feel like, it's stable and, the demand is growing. We feel like it's an essential service. We are all going to age and need levels of care throughout our lifetime. And there's a huge potential for very high occupancy. We have a number of homes that we own and operate at full capacity. Really, it's a diverse investment, opportunity across the whole spectrum. There's a lot of things that are going for this industry. Obviously, with that many people retiring, there's government support and favorable regulation in this environment right now. So, for example, in California, there are a number of regulatory bodies that are obviously trying to look out and protect the people that can't protect themselves, right? But there's also a lot of opportunity that's given for people to actually do the work to be able to care for these people. So there's a number of, and this kind of goes across the board, but there's Federal Housing Administration, there's state financing agencies, there's Medicaid waiver programs. In California, there's an assisted living waiver. So there's all these opportunities and incentives for people to get into this business and to really help out a demographic that's in great need. We want to unveil innovative opportunities right now that as we see it. So as we mentioned, there are larger, bigger box facilities that are more of a resort style offering that are out there currently in the market with different tiered levels of care. And basically, it's independent living. And then as you age, you go into assisted living. There's a lot of concierge services and wellness programs associated along with transportation. As I mentioned earlier, there is tech-enabled care, and there's a whole industry that is making a big push. Denise and I were talking about it earlier, and we were kind of joking, there's still some things in this industry where you are actually sending not even e-faxes, but faxes. So when you have that kind of mismatch of time and an industry, there's a need. And when you're trying to solve a need, there's an opportunity. So, this industry, we're already seeing it leveraging technology from remote monitoring, medication management. social engagement, fall prevention. We're seeing AI and robots coming into effect. We even in one of our own facilities, we've engaged our residents with Oculus that our kids were using.
It's amazing because say there's a resident love to travel, they've never been to Paris, they want to travel, or they'd love to see it. It's been a lifelong dream. They could put one of these headsets on and they can automatically just be transported to the streets of Paris or the ocean. So it's really awesome. It's amazing for people who don't actually have the ability any longer to live out these dreams of travel or seeing these exotic locations. So to be something to consider. It's really a great thing for them.
And although tech is enhancing this, there's lots of programs that we offer within our facilities that are a lot more traditional. We bring up artists, musicians, Girl Scouts, right? Even our own kids. It's almost like we've seen it, almost like the movie Cocoon, where, somebody that might be, not as engaged, as soon as youth walks into the home, it's almost as if, maybe for some of them, our children remind them of their children, or they see their, granddaughters or grandsons in our kids. And it's really, what started out for us in some ways more as a business initiative, it really has been so much more. We've navigated through COVID. We took all the precautions. We had 0 COVID incidents at our property, at our facility. And so there's plus and minuses for operating small facilities, high-end boutique. And then there's also, the argument for operating larger facilities because the need is so great. Also, we believe that there are opportunities in senior living communities with specialized care.
Yeah, definitely. There's communities that cater pre-care, Alzheimer's, dementia residents. Also rehab, and even they have specific to where they came from. Like there's some facilities that specifically cater to Chinese or Korean or Jewish, and not to promote segregation, but when you're at this stage of your life and say that you have memory issues, Alzheimer's, and there's so many things that are just not familiar, that are challenging in your day-to-day life, you can't remember so many things, sometimes not even your own children. Sometimes just having the comfort of being able to eat the food that is native to them and speak their native tongue is very reassuring and very nurturing for them. So that's something that's really interesting to cater specifically to very specific ethnicities or religions or just, preferences.
Yeah, it's almost like when you're young, you want to go out and you want to explore the world. You want to experience new things. But at this point in a lot of people's lives, they, having that thing that's familiar, whether it's food or language, talking about, the country that they grew up in, whether, it be a demographic, a specific location, or, it could be a kosher home, or, there's all kinds of creative, interesting ways to really cater to the need that's out there.
And then this co-living for seniors, that's basically what we're talking about as far as what we run, residential facilities for the elderly, or, our CFBs in California, RELs, and some other states. So these are more like single family homes where you have a limited amount of people, like say 6 to maybe 10, depending on where you're living and what the regulations are.
Some states up to maybe 16.
Yeah, some up to 16. In California, it's 6 right now. But what's beneficial about these is they're actually homes, and they are just, they can't live in their own home. It's really nice for them to be able to live in a home. So it helps them not have to be in an institutional type setting. And that's really healthy also for your mentality and just your spirit.
Absolutely. And so this is the point at which we get to in the presentation where when we talk to people about different investment opportunities, this is where they get stuck. And so there's a certain barrier to entry into the space. It's possible to navigate through those. But we're going to talk a little bit about some of the challenges and the risk mitigation.
So I'll just use our small RCFBs on RALs as an example. So like Mike says, there's a lot of barrier to entry because there's a lot of oversight on a government level, on a county level, OSHA. There's so many regulations that you need to adhere to. And it's sometimes daunting, but it can be done. In California, you need to get licensed by California Department of Social Services. And you also have to pass a fire inspection to make sure that not necessarily you're ADA compliant, because it's not quite as stringent as that, but you do have to have ramps and grab bars, and the halls and the doorways need to be a certain width to allow wheelchairs to pass with ease. There's also labor laws because it's a business, so you need to adhere to those labor laws. We were talking about that a little bit. So that's something that you have to be completely compliant with. Licensing, they will do random inspections. So there's a number of things that you need to adhere to. And something as simple as water temperature. We need to have our water temperature at all times between 105 and 120. If it's below that or if it's above that, then you'll get a citation. So things like that. But they're definitely manageable. You know how to do it. If you have a checklist and you make sure regularly that you are compliant, then you don't have to worry as long as you are doing it. As far as operational risks, so there's a number of operational risks, especially where we are here in California. It's a very litigious state. With seniors in assisted living, it's not a matter of if they're going to have a fall, it's a matter of when. And it's a matter of also that you're following the right procedures when they do have a fall like that. All of your staff has to be trained properly. So you take the proper procedures, proper reports or facts to the governing body, in this case, the CDSS.
And Denise did say facts still at this point in time, not even e-facts. But wouldn't you say that the way to mitigate the operational risk is to document?
Yeah, definitely. It's important to have on each shift reports from each staff member about what went on. So if there's anything that happens, let's have that backing. And that can help you in legal situations as well.
So in just a few years past, the way that people operated these scenes historically was, you walked into the administration's office and there was folders and binders. And so now all of that stuff is going real time to the web. So from owner operators and from an investor standpoint, or thinking about owning and operating one of these scenes yourself, the advantage now is that you could have a dashboard. You could see exactly what all your patient, what medication's been given, what dosage, what was the activity like for that day. Were they feeling good? Were they not feeling good? Was it, were there any outbursts? You could really understand, your resident base and really give more pointed care. And, there are a lot of redundancies, but redundancies in this space are a good thing because that checks and balances that really is your reference in case anything does go wrong. It does take a very specialized type of person to be a caregiver, and they really do an outstanding job, but they do need to be trained and they need to renew their licenses annually, correct?
Basically, they need to, before they can be caregivers in your facility and in our state, they need 40 hours of training. And every year they're training, they need to have 20 hours of continued education. Administrator needs to have administration, and that has to be renewed every 2 years. That's great, though, because that means that their knowledge, their expertise is being refreshed, and they're keeping current with all the latest updates in the industry. Another operational risk that just came to mind is also staffing. Imagine right after COVID, a lot of people were getting a lot of free money from the government. So at that time, it was very difficult to find caregivers who wanted to work because some of them just enjoyed more just staying at home and getting this free money. They didn't actually need to work. So that was a challenge we had to get through. But it's more normalized now. But there's just different things depending on what's going on in the economy at large.
And I think as we pass from that point in time, and with the current need, I think it's the time couldn't be better to be looking at this space and potentially considering either investing or getting started in it.
And then financial consideration, this is a business. So, I always say it's like having a single family home. You have a high paying tenant, paying $6,000-7,000 a month times 6. So that sounds amazing, right? But it is a real business. There's obviously the cost of doing business. As I said, expenses are about 70%, maybe a little bit more in some instances. But so you have to have that budget and know that, you can't just decide to start when you need to be able to have that. And licensing is going to check and make sure that you have 3 months of operating financials in your bank account.
So there's a couple key strategies for success. So with any investment, it doesn't matter if it's, stocks, public equities that I, played in that space for a long time, multifamily, like we mentioned, or in this space, you should always do and conduct a thorough market analysis and research and identify the underserved needs of your community. Partner with experienced operators and reputable brands, or at a minimum, build a relationship with somebody who's been doing what you want to do and have them be an advisor. And then focus on locations with favorable demographic and regulatory environments. So, we're operating in California, very litigious, a lot of regulation. And if we could do it here, you could do it anywhere. And I really think that, this key point here is that, favorable demographics, the need is everywhere. It's going to be across the country. Really prioritizing residents' well-being and quality of care for long-term success is huge. This is not only, this is investing with a heart. It's a feel-good business. And really embrace innovation, because we're taking something that is a basic need for a lot of Americans. And, I think when you add technology to something, it gives an opportunity to improve upon it, especially with telemedicine, telehealth. These are all things that will really increase the longevity and hopefully the well-being of residents in our facilities. And custom care. So this is really as creative as you want to get in this space. I mean, you could really niche down, and, as far as investing goes, people always say the riches are in the niches. So you could really hone in on a particular underserved demographic, or you could try to go, to the highest end, offering, and everything and anything in between. The integration of artificial intelligence and robotics are big. I've seen it at a number of, seminars in the space. Robotics. So if you think about it, somebody's sitting at a table and they drop something and the robot could sense it, could go pick it up, hand it to them. If somebody has a fall, the robot can go, alert a caregiver or a staff member. In the same sense, that same robot could also keep an eye and keep the caregiver, honest, and make sure that the caregiver is doing what the caregiver should be doing on their shift. And, just another redundancy, another safeguard. Also, always focusing on preventative care and wellness. And this is all about stimulation and really keeping seniors active, getting the right physical therapy, and just keeping them active, keeping their minds agile. And really, we also look at sustainability and eco-friendly senior living communities. Denise.
I love this because, just think, it's the whole green movement is really big. And I love the idea of holistic type senior living communities, assisted living communities, where you focus on total wellness and, you focus on not only the Western medicine type solution to help issues, but you can introduce morning meditations, which we do. You could do chair yoga. You could have like these vertical grow towers that grow lettuce and different vegetables that they can interact with and that can stimulate them, where they could pick their own lettuce leaves and then make their own salad. There's a lot of really fun things that you can do that can really stimulate their minds and keep them active, engaged, and just, again, you focus on the total wellness, not just what medication is going to solve that issue.
Yeah, and a lot of the, some of the biggest stuff that we see or most frequent stuff, I would say, is type 2 diabetes and high blood pressure. And those are both, achievable to solve. If the resident is willing, if we cut back on sugar, if we cut back on less, on processed foods, and really just changing the approach, because a lot of times some of the cognitive decline, it's due to our lifestyle, plaque buildup, and different things in people's lifestyles. So we love the holistic approach. So this demand is rising, and specialized care and quality comfort spaces for our loved seniors is huge. Obviously it's a business, it's a cash flowing business, but it's also a business that cares. So involving senior living facilities and compassionate care and lucrative returns are available, and they're out there. Really the supply and demand is an interesting gap that we're at right now, and it has runway for the next 25 years. So the demand is huge. And like I mentioned before, it's investing with a heart. It's beyond just profits, but the profits are there. And if you run communities, you have the ability to really make a difference in people's lives, which, we have gotten so much out of this industry. It's actually led us into other aspects of investing, but it all really started with assisted living. So in conclusion, we think senior living market is not only expanding, but evolving. From real estate development to healthcare services and technology solutions, there are so many things and so many opportunities for investment in this space. So innovation is key. Obviously, when you're solving a problem, the future of senior living is marked by innovation, and we're witnessing it all the time. The power of a smart home solution, telemedicine, robotics, all enhancing the quality for seniors. And the challenge is real, like we mentioned, but it is manageable. The regulatory landscape, operational risk, and financial considerations are challenges. They could be, managed and addressed. And we're living proof of that. We've been operating in the space, and I think it's a great, for anybody who's considered other commercial real estate spaces or even short-term rentals. I see what's happening with technology right now, similar to what technology did to the taxi industry, right? Uber, Lyft. I took an Uber home today from the airport, and those same things are coming to this industry. So you don't necessarily have to own one of these. You could invest in one of these type of properties, but you could also, if your background is tech, there are so many solutions and creative ways that you could get involved.
There's just a huge demand. You saw the statistics and the baby boomer population, the demographic shift, and the need is immense. And, where there's a supply and demand imbalance, that's where there's opportunity for investments to thrive. So this particular asset class is only going to grow, and it's not crowded enough right now. There needs to be more operators, more good operators who really care not only about the profit margins, but also care about this demographic and making sure that they can live the best lives possible for the rest of their days. So it's certainly investing with a heart. So I would definitely urge you all to consider looking into it.
Absolutely.
All right. Well, we're almost coming up to an hour, but we would welcome any questions. We'll go through a few of them. And then if you still have questions after this, we'll give you our contact information, and we'd love to have a call with you. If you have any questions about assisted living, how to invest, opening up a residential care home for yourself, we're an open book, and we'd more than welcome time to chat with you.
So I think the first question that I'm seeing there is for a smaller scale residential care home like the one you operate, what is the timeline for application process?
All right. So I can't answer that for every state, but I know in California, the general timeline from application to approval is usually about 5 or 6 months. And it depends on how busy that governing body is. I mean, I've seen it average out a year sometimes or in the past, but right now I'm seeing it about 5 to 6 months.
There's a question right here. How do you staff the residential care home?
You need to have, in California again, and I'm sure other states have managers, or they also have certified administrators. In California, you have a certified administrator. So you need an administrator for these homes, and then you have caregivers. And I would say that, I mean, caregivers can be trained, so they don't necessarily have to have the experience, but it really helps when they do have some kind of medical training background or caregiving background. So typically the way that we do it is we staff 24 hours, 7 days a week. So we usually have 3 8-hour shifts, 7 days a week. And then when it's full, you'll perhaps have another staff, like a second staff member or somebody helping with activities and just miscellaneous cooking, things like that.
So the next question, let's see. Can you have only 6 in a residential care facility in California?
California, it is 6. That's the number, like we had mentioned earlier. Some states, I believe Arizona's 10. Some places are as high as 16. It depends on your particular state. But there are ways, if you have a property that has a main house and a guest house, you can get both licensed. They'll both be independent businesses, and they'll each have their own licensing, and they'll have to be staffed individually. But it is a way to maximize, so you could have more residents in one location. And again, it's state specific as far as the number that you can have under one roof.
So the next question, do you have hospice services?
We do. And for those of you who aren't familiar, hospice is end of life services. So it's, the residents they have like a prognosis of maybe 6 months or so. So we do you have to apply with licensing to get the waiver. And on average, we usually have 3 to 4 waivers at home.
Yeah. And just another note, with the hospice, there is a hospice staff. So in some situations, like for us, for example, let's say we had 2 hospice residents, they would have their own staff that would come and look after them. So what that would do in that situation is it would actually free up our current staff, our normal staff, to care for 4 residents as opposed to 6. So it is, from a business perspective, it's interesting because it allows your staff to not get overworked at times. And also from a care perspective, it really gives the residents the right care that's needed for that at that time.
Now, you do work in partnership with that hospice agency, like Mike was saying, and they do have nurses that'll come and oversee that hospice resident or hospice patient. They also have other staff that can help them with bathing and grooming and just companionship. So that's a service that they provide. They're not there 24/7, so your staff does take care of that resident when they're not around, but it certainly helps. It helps alleviate some of the pressures and overworking residents caregivers, because a hospice, there's a lot of care involved. They need more help in general.
So this next question is, do you take people with major medical conditions?
Okay, that's a good question. So the RCFB or round model, it's considered a social model. So we cannot, for licensing, accommodate residents who need 24-hour medical supervision. That would be more appropriate for a skilled nursing facility. Now, we do often get residents from skilled nursing facilities when they've been stabilized or, they don't need that 24/7 medical care any longer.
And does Flow Equity Partners have any assisted living deals for LPs in our pipeline? Currently, at the moment, we're always looking at stuff. We see deals come across our desk all the time. We've identified a couple what we believe are, in our opinion, we would consider them like a best-in-class operator that we've been getting to know them, right? So before we were, we would want to take out an offering to anybody. We really need to qualify not only the projected, numbers, but also, the level of care and the standards that we believe are needed, to run a successful home or even a larger operation. So we do have things that will be coming in the pipeline. In the coming weeks to months, we'll keep up our investor database. And if you'd like to learn more about these things, feel free to reach out. If you have any questions on really any of this, do we have a QR code that maybe?
Right here, if you scan this QR code, it will lead you directly to our Calendly link, so you can book a call with us directly. Or if you'd like, you could also email us. Our email address is right here, connect@flowequitypartners.com.
Just want to thank everybody for logging on tonight. We appreciate your time. And thank you for listening to us to, a space that really speaks to us. So thank you.
Thank you so much, everybody. Have a great evening, and we hope you book that call. We'd love to chat.
Thank you very much. Have a good night.
Bye.